What's going on, traders? The one, the only. I'm here, Money Mitch, and of course, we got it going. Oh, look, no, hold on. Now, split it. There you go.
Chrisopedia. Oh, there's the volume. There we go. What's going on, everyone?
Hey, another day in paradise. Welcome to SPAC's Attack. All right, guys, welcome. Yes, like Zoltan says, happy Friday. I'm excited. We have a great interview today. We're going to get into Planet Labs, another Niccolo De Masi. I know, the king himself, but definitely, Niccolo, if you're watching out there, shout out to you. Chris, what are you excited about today? And what do you want to talk about?
Yeah, I mean, another live show, right? Side by side with Mitch here from the Benzinga headquarters. I'm super excited about this interview. We had Niccolo on when this deal was first announced, right? So we got kind of the behind the scenes, the why DMY Technology decided to acquire Planet. Now we're going to hear from Will Marshall, the CEO, all about Planet and what they really do. They have some great investors. They have a partnership with Google. I mean, we're going to dive into all of that on another exciting satellite play coming public via SPAC.
All right. If you guys are just joining in from live trading, yes, we are going to get into Planet. We also got, of course, like always, our headlines. Let's go ahead and Chris, take us on back. Can't remove myself here.
Yeah, I know you're so used to just putting me full screen, but right now, again, yeah, you got Mitch and Chris side by side here, live in studio. So yeah, let's get to some headlines. So up first, we have some analyst notes to talk about, right? So we have Cano Health, Cohen and Company initiating coverage with an outperform rating, price target of $18. That ticker CANO. This is one that's gotten a lot of attention since going public via SPAC. It's a healthcare play. Went public via Jaws. One to definitely keep on watch and getting that initiation today. And then Mitch, another exciting analyst note, right? It looks like someone has been watching SPAC's attack, maybe someone from B. Riley Securities, because today they're out with an upgraded note, a buy rating, and a $32 price target on Genius Sports, GENI. I mean, talking about the opportunity for online sports betting, total addressable market size, their business-to-business online gaming companies that they partner with. And again, $32 price target, as really a leader in the sports data division. So, Mitch, what do you think of this note? I mean, we talk about Genie so many times, and B. Riley out with a very nice call today on Genius Sports.
All right. Well, my biggest question is always whenever I see these kind of analyst ratings, I want to go ahead and see, is it the highest on the street? And it looks like, that looks like the highest on the street for me, right? I mean, what we got a 31, we got a 32 now. So we're definitely going to be paying attention to this. As you guys can see, hey, they're definitely liking Genie. And I mean, if you think about it, that's higher than the 52-week high, right?
Yeah, I mean, that's a nice price target. And again, we've talked about Genie, the huge opportunity they have, the partnerships. Mitch, we didn't get news yet from them. FanDuel, it looks like FanDuel taking it to the wire. They have not partnered with Genie on the NFL data yet. Again, I would expect that to come anytime with the season kicking off last night. We did get the Penn National deal yesterday with Barstool Sports. So again, Genie, like Mitch said yesterday, they're going after the content first, and then they're going after the providers. And that system seems to be really working for them. And it is then getting a lot of attention from analysts. So definitely keep Genie on watch. But if you have tuned into the show before, it should already be on your watch list, GENI.
All right. Well, I just want to interrupt here because I see something mentioned in the chat here by Matt Hammond. our friend here, definitely checking out Sports Radar, talking about the IPO next week. So this is definitely going to be something to look out for. Of course, you guys know how I feel about Sports Radar. I feel like they're definitely losing out to the competitive advantage that Genie has over them. I think one of the things also that made Genie look a little better was when Sports Radar was kind of denied by taking, going public via SPAC, and now it's going to the IPO market. The question is, does the valuation change here? I'm going to be paying attention towards that as we see it. I'll be looking towards Matt Hammond on Monday, probably talking a little bit more on Sports Radar.
Yeah, I mean, Mitch, great point here. Sport Radar, right? When it was going to go public via SPAC, they still had the NFL deal. Now they don't have the NFL deal, right? What kind of cut does that do to valuation? I mean, look at when we've talked about, Topps and Panini losing out on these, trading card deals with the sports leagues. It definitely cuts your value. But again, going the traditional IPO route, we'll be able to see, how the street feels about this one. Obviously, I think Genie with the NFL right now is going to be hot. And with that being said, we could see a makeup trade. If Sport Radar does take off with its IPO, I think people are going to come running to Genie. So definitely keep an eye out next week. Great call out there, Matt.
Yeah, Matt giving us a little bit more information. He's looking that they still got the NBA, MLB, NHL. So we'll definitely take a look at that. Let's go ahead. Let's get to the next headline here. What else we got, Chris?
All right. So we got some earnings out from a couple companies that have announced SPAC deals but have not completed the de-SPACing process. So up first, we have vgac. So tpgs is the ticker here. So they reported revenue of $240 million. That's up 188% year over year. This deal was announced in late July, but so vgac, tpgs, one on watch today with that reported earnings from them. So it looks like gross bookings, $514 million was up 247%, and then 1.4 million nights sold. That's compared to 449,000 last year. Obviously, this could be a post-pandemic play, right? As people book, trips. So keep an eye out on this one. A nice report from them. And then we have ENFA, which is taking BuzzFeed public, right? A lot of you out there probably know the BuzzFeed name. So revenue of $89.1 million in the second quarter. That was up 51% year over year. So 6-month revenue up now 31% year over year. Advertising revenue up 79% in the quarter to $47.8 million. Content revenue up 5% to $24.2 million. And then their commerce and other up 82% to $17.1 million. Adjusted EBITDA also improving in the quarter. So, BuzzFeed, Mitch, we've talked about these media companies, right? Yeah. Going public via SPAC. Obviously, that advertising line, right? The big business for BuzzFeed. But I mean, 51% year over year growth. I mean, that's nothing to sneeze at here. So definitely, ENFA, keep on watch with BuzzFeed. What do you think of this report?
Well, one thing that stands out to me is that commerce and other revenues increasing 82%. And so that just shows you that, hey, there you go. Online transactions is becoming more and more a thing in media that you got to pay attention to, because, I mean, that's just where we're going to, right? And so you want to see that side of their business continue that massive growth. If it grew 82%, let's see if we can even get 75% growth in the next quarter. And that will show you that, yes, that's like one of their highest growing areas, which could get in the long run right back down to the bottom line.
Yeah, great point there, Mitch. Looking like they're diversifying a little bit away from just the ad revenue. So that is nice to see, that percentage increase there. Mitch, we already talked about Genie a little bit. We got to, talk about sports betting a little bit. Obviously, we had the NFL kickoff last night, right? And we talk about sports betting so much because a lot of these companies went public via SPAC or are, going public via SPAC, right? We've got, DKNG, GNOG, RSI, GNI, AUS, SEAH. I mean, there's so many out there, right? And so DraftKings CEO Jason Robbins was interviewed yesterday. Mitch, we watched the game last night, right? We saw multiple sports betting companies advertise during the NFL game, right? That's a change this year. The NFL now allowing sports betting companies to advertise directly during the game. So, I mean, you're going to see that customer acquisition really come into play, right? Who's going to get those customers? Who's going to offer the best promotions? And I really like this data that I saw today from Action Network. This is kind of mind-blowing, right? We talk about the total addressable market size for sports betting. So in 2017, when the NFL season kicked off, there was only one state that had legal sports betting. 2018, 5 states. 2019, 12. 2020, 19 states. And now this year, Mitch, 2021, how many states do we have that have legal sports betting for the NFL season?
Well, I could see the answer here, but at the same time, I almost can't believe it. It's 27? That is pretty impressive there. One of the things is that I've said it, and I think I since the very beginning, state by state, this just shows up on the bottom line. And we never know if a state's going to become legal or not, right? There's no promise. There's just a lookout towards a vote. And so one of the things is, I don't think these companies are even, it's hard to predict the revenue in the next year because we just don't know what states will become legal. And
Right.
with this being said, I think this gives an advantage to what? The retail investor.
Definitely.
Because then you're able to at least go ahead and make that decision, and no one has the edge there. So I kind of like it there. I think the edge kind of leans more even to retail there. But as you can see, 27 states, I mean, that's incredible.
Yeah, I mean, we're over halfway, right, on a state-by-state basis, and definitely a huge total addressable market that is just growing. One of the stocks we've talked about a lot this week, right, is Catapult. It's an Affirm sympathy play, buy now, pay later. We'll get to that later on the watch list, but I do want to highlight that they filed their S1 registration for PIPE shares, right? So that's worth noting because there's now going to be more shares available in the float. So keep an eye out on KPLT. We could see PIPE investors, sell their shares now that they are unlocked. So just throwing that out there for everyone to be aware. Yesterday's 2 deals that were announced, Mitch, NXU and HTPA, both ended the day up 1.4%. Obviously not a huge jump, but lately we had only been seeing, a 1% or less move. So a little bit higher on yesterday's deals. Definitely like seeing that. And then, Mitch, we got to talk about Rice, right? RICE, the SPAC deal, right? So first, I got to know, I had forgotten this, Mitch, that their new ticker is going to be LFG. Is there some meme potential here with Rice? I mean, Rice was already a great ticker, but now they're going to be LFG. I think maybe some retail traders might like that ticker. So we'll have to keep an eye out on that one. But Mitch, we said this on the show yesterday, right, that you can redeem your shares at net asset value, right? And Rice shares were trading over $16. So we said on the show, hey, please pay attention to this, right? Hopefully no one redeems their shares for net asset value. And Mitch, wouldn't you know it, at least one person redeemed their shares. Do you know, what's your guess? How many people or how many shares were redeemed of Rice at net asset value?
Well, hopefully they were watching SPACs attack, and the answer is 0. But just one thing that we've realized, Chris, I mean, you and I both have seen this. This industry needs more information out there to the retail investor because somebody made a mistake, I think, because I heard there was a pretty decent amount of shares redeemed. What was that number?
So 46,972 shares were redeemed at net asset value. So again, Rice shares were trading over $17. So instead of being able to sell those shares at market at $17, at least someone exchanged their shares at net asset value of $10. So they just lost out $7 a share because of the redemption process. So again, guys, it's all about education. Make sure you know or ask questions about that merger vote date, the redemption process, so you don't miss out on, in this case, a profit, right? So definitely have to point that out. We do have SOAC changing over its new ticker today. I believe already happened to TMC, the metals company, right? This is the one in a couple of years hoping to grab metal off of the seafloor. This one did have heavy redemption. It was trading higher as SOAC. We'll see what happens today with TMC. And then from our friend Julian Klimachko, right, he pointed out that the SPAC index has actually gone up for 5 sessions in a row, when the S&P 500 has declined 4 days in a row. So again, SPACs tend to trade opposite right now of the S&P 500 because they are a hedge with that arbitrage opportunity. So keep an eye out on the SPAC index.
That's interesting. I'll definitely have to keep an eye on it. One of the things that I've been seeing is, yeah, there has been some kind of commotion in the industry, and we have been seeing some stocks make moves up. It's not just one name, multiple names. So we're definitely keeping an eye on it.
And then, Mitch, we did get a deal announced. This one was actually announced not too long ago, I believe at 10 o'clock today, instead of, the normal pre-market deals. Ticker is GPCO. They announced a agreement with MC Hologram. I'm not familiar with this name, but Mitch, surprise, surprise, MC Hologram is a company in the LiDAR sector. So another LiDAR SPAC deal getting announced. So they do high precision holographic light detection and ranging solutions based on holographic technology, exclusive holographic LiDAR point cloud algorithm, and breakthrough technical holographic imaging solutions. So again, a LiDAR play. I have not read through the presentation yet, so I'm not sure on their partners, but LiDAR sector getting quite crowded. So, definitely look for the ones that have the deals in place, those partnerships, and the revenue already there. We do have one vote today. Quell, their merger vote with Lilium. That's a electric vertical takeoff and landing company. And then Mitch, also, next week we'll talk about them on Monday, but we do have several votes happening next week. Of note, of course, we have Soaring Eagle with Ginkgo Bioworks, SRNG. That's one of the largest deals that was announced last quarter in money terms, right? So that's a big one to watch. Could kind of be a landing point for how SPACs are going to perform, post-merger. And then we also have, a couple robotics and surgical companies. But again, we'll highlight that more on Monday. But yeah, September calendar is kicking in full effect now that we are almost halfway into the month.
Definitely got to stay with the calendar. We do a show once a month where we go through all the calendar dates that we have. So if you haven't seen that show for September, you might want to check it out. All right, guys, let's go ahead. Now it's our time to get into what we do best, which is unlock the SPAC industry, right? That's one thing that Chris and I really did this show to start. Was it wasn't necessarily that, we were, trading SPACs and we just wanted to make a lot of money. No, it was an area where we felt that definitely there was a disadvantage from the information that was out there. And so that's what we try to do here on SPACs Attack, is unlock the SPACs. So up next, we're going to be getting into Planet Labs. I'm super excited about this, not only because, of course, who's behind the SPACs, but more along, it's an area that actually really interests me. You guys know how I've really liked Maxar. Then we talked a little bit about Black Sky. Then we found out a lot more about Planet. Let's go ahead and dive deep into Planet with Will Marshalls. Yes, he's coming on next. Let's go ahead. Let's knock it out, Chris. Unlock the SPACs.
All right, guys. Yeah, super excited. Another exclusive here on SPACs Attack. Joining us on the show today, we have the Planet CEO and co-founder Will Marshall. Company is going public via SPAC merger with DMY Technology Group 4. That ticker, DMYQ. Welcome to SPACs Attack, Will.
Glad to be here.
Welcome to it. As you can see, I've been looking at space for a while now, so I'm super excited to have you on. And we'll let Chris ask some questions first, and then I'll dive with some of my own.
Awesome. Well, Will, we're excited to have you on here. We had Niccolo De Masi on shortly after this deal was announced. He told us, the conviction in this trade, right, and why he got the deal done. And now we get to hear from you, right, and hear more about Planet and what exactly the company does and what's ahead. So, one of the questions we'd like to start with on SPACs Attack is, why a SPAC to take Planet public, and was a traditional IPO also a consideration for your company?
Yeah, well, thanks. Great to be here. And I actually watched that interview and it was fun. I like the summary of it being a space business, but with revenue. and, but that you guys evolved to the discussion that actually really it's a data business, right? It's not about selling the satellites here. It's about the data and how it provides real value to people on the Earth. It's not about rockets or satellites. It's about the data, and it's not about the moon or Mars. This is a space business about helping the Earth economy, sustainability, and a digital transformation of big industries. So yeah, anyway, to your question about the SPAC choice, we very much thought about all the different options, the DPO, an IPO, a SPAC. And I mean, the real thing is that we were excited to go public, and we thought this is the right time. Planet is ready. We have a mature satellite fleet, 200 satellites operating. They're doing great. We have built the data systems on top of that. We are a mature business with over 100 million in revenue. So we were ready for prime time. And then we were like evaluating the options, which is the most efficient way to do it. And Niccolo and Harry knocked on our door, and a number of SPACs had. There was a bit of a SPAC frenzy, and especially space companies were like hot commodities for these. And but we really like Niccolo and Harry and everything they stood for. They really understood us as not just a space company, but this data company as well. They saw the full value, not just, and they'd seen these synergies with IonQ and Genius Sports, and how it's sort of a bit of both. It's the hardware, and we've got deep vertical stack hardware that gives us a big leading edge over other companies. But at the same time, on the business, we're a data business, high profit margins, high growth. And so they saw the best of both worlds of that in Planet. And we saw that they saw the full value of Planet. Also, of course, we had great other investors that we've now pulled into the pipe, which like BlackRock led the pipe. Google's participating, Mark Benioff, and we're really fortunate to have excellent investors around our table that can help advise us on taking it public in the smartest way.
Definitely, yeah. You mentioned the pipe investors, right? And I just want to highlight that for a minute, right? We've got BlackRock, we've got Time Ventures, we've got Alphabet, and Alphabet was actually an investor in Planet prior to the SPAC deal. Can you just talk a little bit about, these big names in the pipe? What does that do in terms of validation for a company like Planet going public?
Well, it's super important, of course, for us. I mean, this is not just an exchange of capital for equity. It's a partnership. It's a partnership where, take BlackRock. They're Larry Fink's done his CEO letters saying, hey, every company isn't going to get access to capital unless it starts measuring its ESG and doing that well. Well, what's the first thing you have to do to measure ESG? You have to track natural capital, the forest, the water, all the things we've been assuming is free in our markets, which are not. And we need to and the first step is measuring all of that. And so he recognizes, and that their team there, like how we can pull that data into their sort of systems to help inform their investments, so that we can help give investors the data that they need to know, are the companies really sustainable, as we all try to move to a sustainable economy. People like Google, of course, are super smart tech investors. I love learning from their expertise. I mean, one of the things I love, a lot of people call us a satellite company. And I say, well, that's like calling Google a server company. Because of course they're really good at servers, but ultimately the servers are the back end. They're a search company, they're a maps company, they're providing these services. And similarly, Planet is not a satellite company, it's a data subscription business. That's what the users see, that's what the users get value out of. They even know which satellite the data comes from. I mean, our back end is a little bit more sexy. The satellites are more sexy than the servers. But another thing with Google is that people think that you can think of Google in several different ways, but one thing that I know is that they're pumping out all of their AI algorithms as open source, but they'll never put out their data. The key asset that Google sits on and that any company really cares about is their data. And this is what Planet has, right? We have a proprietary fleet of satellites producing a proprietary set of data, the image of the whole Earth every day, with all the value potential that has for agriculture, for energy, to finance, to insurance, to the government, and so on and so forth. And it's ours, and we get to distribute that. As Niccolo likes to say, that gives us pricing power in the sector, especially whilst we're ahead, on which we aim to stay.
All right. Well, I know you already touched a lot of this, but for the investors that might have not caught our first interview, can you just tell us simply what is Planet and what's the mission here?
Well, the mission is quite simply to image the whole Earth every day and track changes and make it accessible visible, and actionable. So we are taking an industry that was once doing bespoke big satellites for a few governments and transforming and democratizing access to satellite data to everyone else. This slide that you brought up here gives a few snapshot of planet at a glance. 200 satellites. They image twice the Earth's landmass each day. That's 300 million square kilometers. Just to put that in perspective, that's 100x our nearest competitor. So we're producing 100 times more data than anyone else by area collection terms. And then on the right-hand side, a few business metrics. Just over 100 million in revenue last year. Our FY21 is last year because we were January year, and 90% recurring revenue business. This is a subscription data business, as I mentioned. And then over 62% gross margins is something that was really important. That is including depreciation and amortization of the satellite assets. People think, oh my God, you guys have satellites. It must be really capital intensive. And that's true. But just think about the business model of selling. We've been innovating on the satellite side to get extraordinary satellites, which we believe are the best by far. But we've also innovated on the business side. So instead of sending a picture to one customer and taking a picture of their request, of their locations, we scan the whole Earth and we sell each picture multiple times. And of course the incremental cost of selling us an image to a second customer is, really, really low. And so our margins are very high. So this is our margins, and they're going very high up, and they include the cost of the satellites. The payback period on our medium-range satellites, like this guy that's just behind me here, is 3 to 6 months. And then we're just gravy from that.
I like the way you look at it, and definitely the gravy is what it's all about there. So let's go ahead, Chris. What you got next?
Yeah, Will, we've already talked a little bit about Google, but I know we're going to get some questions from the chat on that because obviously Google's such a big name. So, Alphabet was in on the pipe. They were an investor in this company before. Can you tell us, how long has Planet worked with Google, and what does that relationship look like? Is Google the biggest customer, and what is ahead in this relationship?
Oh, there's 3 aspects of our relationship. Firstly, we provide data to their maps. So the maps that you see online are kept up to date using our satellite data. So it's an incredible system on the product side there where when they find any signal that their map is out of date, sometimes they see cell signals of people driving through a field and they're going, hey, a second, maybe there's a road there. And then they tip our satellites to say, hey, look at this location. They take a picture, they bring it down, and then they automatically pull the new roads or the new buildings or the new train station or whatever it is out of that image and stick it into the vector layer. So your maps stay up to date. The reason you don't get wrong driving directions is because our satellites are doing tens of thousands of requests that are completely automated. So it's a complete closed loop system. They are a big customer of ours that way. Secondly, we store our data on Google Cloud. So we have a great deal with Google to store data on there. And that keeps us close to the best machine learning technologies that Google offers. And then thirdly, they're an investor. So they're a shareholder in Planet. And our relationship goes back about 4 years. And to the time when so we have 2 fleets of satellites, I forgot to say. We have 180 of these medium resolution satellites that scan the whole Earth landmass at about 4-meter resolution. Every day, the whole Earth. So every point on the Earth's landmass, we have about 1,500 images at this point. And we have a second fleet of high resolution satellites that we actually acquired from Google. So Google have been developing their own satellites for their own maps, basically. And then they said, well, it would be much more efficient if you guys ran these satellites and just we buy the data off you. And then you can sell the data to other people. And there's lots of efficiencies of doing that. So we actually acquired their satellite arm about 4 years ago. And so that gives us the second fleet of satellites, and they became a customer and shareholder at that time.
That's awesome to hear, Will. I mean, thanks for giving us the behind the scenes there, that Google relationship, and it looks like Google maybe wanted to get into satellites and they said, hey, Planet can do it better. So that's some nice validation there from them as well. And, I've used Google Maps before, so it's great to hear, that you are providing the data for that service and those images. So very nice, partnership there. We talked a little bit about, competitors, right? You said, that you were much larger than the next. Can you just talk a little bit about how you differ from competitors, maybe in the same field out there?
Well, there are, other. Firstly, the space sector is burgeoning, lots of new players, but there's very few that have really got systems in orbit and operational. I mean, because it is still very complicated, even though launch costs are coming down and other things are becoming easier. It's hard, right? Space is hard. It's the systems engineering complexity. I mean, what is in this satellite are very complicated. They have to work with the other satellites. We have to put ground stations all around the world. We have to process 25 terabytes of imagery every day, 3 million 47 megapixels images every day, stitched together. I mean, it's a lot of complexity. So it's not for the faint of heart, you know, and there's very few people that can really pull it off. And we're very lucky to have a team that did a lot of training at NASA and other places to do that. But the long story short on the competitive landscape is that we're the only ones with this scan. We have these 200 satellites. That's more than 10 times anyone else's number of satellites, but it's also, more importantly, much more data. So we produce about 100 times more data in area collection terms than the nearest competitor. So can you imagine another industry where the leading player is 100 times further along in some important axis like that? And in revenue, you can also see one of the interesting things for me has been actually seeing some of these others space companies go public through the SPAC process, because I actually didn't know their revenues and their maturity in certain ways. And you know, I've always thought, it's more than just looking at the outside of the car. You've got to look under the hood. And well, it's enabled us to look under the hood. And what we see is that most of the others are about 5 or 6 years behind where we are today in satellite terms, in business maturity. And that gives us a lot of confidence and validates, and our foundations are really strong for growing our business.
Yeah, I mean, you can see it on the slide here we have up on the screen. And that was one of the things Nicolo stressed too when he came on the show, right? Is how much further Planet is ahead of the competition. So obviously there is competitors, but to see how much further, from that starting line that Planet already is, I think, is definitely highlighted by this slide. And you said it in terms of numbers too. So, thanks for that, Will. We have to talk a little bit about the Bloomberg-like terminal for Earth data, is what Planet says here. We, of course, a lot of investors out there, we are familiar with the Bloomberg terminal, providing all that data. Can you just, tell us how this comparison came to be and how Planet really is like the Bloomberg-like terminal for Earth data?
Well, actually, yes, it came about through a conversation I had with Mike Bloomberg himself, because we were talking about, he had a big interest in the environment, and we've been working together on a project called Carbon Mapper, which is a set of hyperspectral satellites that we could tell you about, which can help us to monitor CO2 and methane emissions and other things. It's very cool. And he said to me, you can't manage what you don't measure. And that's just stuck with me. But also in the turn of those discussions, we started talking about Bloomberg Terminal. I think it's an inspiring business, Bloomberg is. And of course, the majority of the revenue comes from the terminal business. It's not like a terminal necessarily, like literally a physical terminal, of course, anymore. We're talking about online information feeds. But that's what Planet Data is doing. Again, it's not about the rockets or the satellites. It's about the data feeds, and it's served up through an interface, a graphical user interface, and APIs that enable you to set up your bespoke information feeds for your interests. You're a farmer, you select your farm fields, and you select certain analytics. As you see in this picture, it's actually a false color image using our near infrared band. It actually tells you crop type and crop yield for your field. So you can extract out information as the agriculture farmer and help feed that into your workflow that saves you money in fertilizer, increases your crop yield. So it's a real win. So it's information that goes into the workflows. Well, what better example of that than Bloomberg? It's information into people's workflows that helps them make smarter decisions. So Planet's just the same. I think the only differences really are that Planet has a proprietary data set, whereas Bloomberg primarily aggregates public source information. Planet has a proprietary fleet of satellites that's very hard to replicate, of course. And the second thing is that it serves multiple vertical markets, whereas the Bloomberg terminal really serves the financial industry. Planet's data can serve agriculture, energy, finance, insurance, and so on and so forth. And so we call it Bloomberg plus plus, but I love the Bloomberg business. Just like Bloomberg, it's a data business with high margins, high growth, and that's what we care about. And it helps get people away from the distraction of the satellites being the main thing. It's actually the data and that services. And we really hope that it can be as successful as the Bloomberg business. I certainly see the market opportunity to be as big as them.
Love hearing that, you got that from Mike Bloomberg himself, in that conversation there. And definitely love that image in the slides there, a great call out there, the Bloomberg like business. I want to talk a little bit about, total addressable market, right? When companies go public, that's something we hear a lot, right? The TAM. So here we have $2 trillion opportunities for Planet. We've got $100 trillion market for digital transformation and $53 trillion for sustainability transformation. This was something we talked about with Nicolo, but let's hear from you now, Will. $2 trillion opportunities. How does Planet plan on addressing these industries?
Well, look, the bottom line is that when you create a new kind of business like this, that no one really knows what exactly the market size is. But the point we're making with that slide is that it obviously is powering these massive global economic shifts. I mean, the whole in many large industries like agriculture are trying to turn to digital agriculture, precision agriculture. And 20% savings or increasing crop yields across the whole of the ag industry is a huge thing. That's billions and billions of dollars, right? And that is replicated in lots of different areas. Transportation is undergoing digital transformation. Civil government is undergoing digital transformation, and many others as well. And then sustainability is how the global economy, especially after the COVID-induced recession, is going, okay, let's reboot into a sustainable one. Let's take into account natural capital. Let's measure our ESG targets. Let's get serious about emissions and climate risk and floods and fires, and take into account and understand those risks. That is something that the first step, per Mike Bloomberg's comment there, is you can't manage it if you don't measure it. Where do those companies go to measure their ESG targets? Where do the countries go to measure their environmental emissions? Well, we provide a foundation layer that I think is not the only data set that's relevant, but it's pretty foundational to those transitions. And so we're trying to play into all of those areas as best we can. We've started with vertical markets where they're ready for satellite data, because that's that's less process. But in time, what we're really doing with this capital is going up the software stack to enable more and more people to get access. The hedge fund. I'm so excited about finance because I think that we've got tremendous alpha on a lot of different commodities. We can tell the wheat yield before everyone else, the soy yield before everyone else, the ships into and out of ports before everyone else, the output from the copper mines all around the world before anyone else, and the activity on all the world's building sites. However, those hedge fund managers don't care to see millions of pretty pictures. They want calibrated time series analysis, right? Well, we've got to build that analytics ourselves or in partnership with others to enable those people to have access. The value proposition is there, but we've got to build up the software stack to enable them. So that's the story of what's coming down the chute now.
That sounds exciting. I know that Chris is the same way. We're definitely looking forward to hearing how that can keep moving forward, because I mean, one of the things that I don't mean anything bad to economists out there. It is very, very hard to predict the economies, and I think you're definitely stepping into the right area where we can get some more accurate. I mean, the data is really important here. So
yeah, especially on sustainability stuff where there's a lot of greenwashing, right? People are placating that. Well, it's going to get serious, both from the regulation side and the business side, like the Larry Finks of this world pushing hard. It's going to get serious. And when you get serious, you can't just make a policy goal and say, hey, we're going to be sustainable. You've got to prove it. And the first step to proving it is measuring it.
Yeah, definitely. We've talked so much about data already, Will, but we have this quote from Nicolo De Masi that I go back to from the deal announcement. He said that Planet has scalable data as a service subscription business. We hear a ton about software as a service, right? The SaaS business model. Tell us more about data as a service, what that means for customers, what you provide, and maybe, what the revenue looks like for a business like this.
Well, to quote the economist once, data's the new oil. I really think there's a lot of truth to that. It's the thing that's powering lots of different fields. I already mentioned how Google, that's the real asset at Google. I think it's the real asset at Bloomberg. I think it's the real asset at a lot of these companies. And so I think data is where it's at. I mean, Planet is both a data as a service company and a software as a service company. I mean, we're certainly providing data feeds, but we're also providing analytics on top of that, right? So enable companies to make smarter decisions. And, you know, the information you extract out of the imagery can be even more valuable than the imagery alone. But it's important to note that analytics without the data is nothing, is worth nothing, whereas the data without the analytics already has intrinsic value. It's a bit like oil without the refinement is less valuable than. Now, of course, we hope our data business is not nearly as dirty as oil. In fact, quite the reverse. We're trying to help transition, as I said, the global economy to a sustainable one. And I think it's, you know, so yeah, I think of that. And it is a bit different though. Data companies tend to be more horizontal than software as a services company. You know, we're applicable to a lot of different vertical markets. And that changes how you develop your products a little bit, you know, and how you go to market. And so it changes things a little bit, but I think, you know, it's not so far from the SaaS model.
Awesome. You know, we talk when companies go public, right, especially via SPAC, you know, there are projections made, right, for revenue going forward. So we want to talk about finances a little bit, you know, so Planet is projecting revenue to grow 44% annually from fiscal 2021 to fiscal 2026. Can you just kind of break down, you know, how much of this is baked in from existing customers? How much of this is from future customers? And is any, you know, M&A priced into these estimates at all?
Quickly on the latter, no. This is all based on the organic growth. So primarily, this is in known vertical markets. We have product to market fit in 4 key vertical markets: agriculture, civil government, defense and intelligence, and mapping. And most of our growth could be just from those vertical markets. We don't need the new ones, but the new ones are also exciting. Like I was just talking about finance and insurance and other where they need more than just the imagery, and they need more analytics that we haven't yet got, that we're building today and with this capital infusion. But I'd say even within the current market, I would say most of the growth can come from our current clients. We have over 600 clients today, and most of our revenue is from a few of them. I think about 75% from about the top 25 customers. But most of the rest of them are lots of other agricultural companies that are just ready to expand. They're doing their pilots, you know, for at 100K level, and could be expanding to 1 million or more, you know, and you know, in other sectors too. So we often start like that. So we've got a lot of customers in our base that we can just expand before having to land new ones. So most of the growth can come from known vertical markets, actually known customers that we already have, the existing customer base. But I am excited about the growth to all of the ag companies, all of the countries around the world, and so on. And then the set whole, whilst that is primarily about sales and marketing, and that's one use of our proceeds here. The second is software, meanwhile, so that we can go up the stack to service some of those other vertical markets. And that's going to be exciting too. I would just say there's a third phase beyond that, which I'm excited about ultimately too, which is the long tail of users. So we're still primarily in phase 1 and 2 talking about B to big B, if you like, the big businesses, enterprise businesses. But with time, as we build up that software stack, it should be possible for smaller organizations, for developers, for that little insurance company, for local city or county government to be able to use our data to be able to inform their decisions too, as it gets more simple. And I think that there's a long tail market opportunity here above and beyond the enterprise business that we're really focused on today.
Well, you mentioned, you know, civil, agriculture, defense, and mapping. I'm glad you brought that up because that leads perfectly into my next question. We have a slide in the presentation and a pie chart, and I love looking at it because your revenue is split fairly even by, you know, several of these largest customer segments. You know, how important is it to have this diversification amongst segments?
I think it's super important, right? I mean, otherwise your business can become subject to the whims of one industry. I mean, look at the last year with the COVID-induced recession. Who knew that was going to come at us? And some industries were hit bad by that, like say oil and gas, and other industries actually accelerated through that. A lot of digitization trends accelerated. Yeah, so I think that diversification is a good thing, and we certainly plan to be. And even within government, which is a significant segment, but less than 50%, it's split sort of between two very different businesses: the civil government, which looks very commercial-like, and defense and intelligence, which looks much more like big government-y. This slide captures where we're planning to spend the proceeds, as I mentioned, scaling up existing markets, expanding into new markets. So the first one is really sales and marketing. The second two are really about software. And then the third one is continuing our innovation on the agile aerospace that gives us new data sets that power the others. I think also Planet is in a good position to do M&A. You brought up acquisitions, and I think we haven't put that into our plan, but Planet, I believe, is the natural consolidator in the market, and there's some great companies out there that we might want to look at. And once we're a public company, I think that's a great strategy.
Yeah, perfect, Will. I mean, you highlighted this slide, talking about the levers for future growth. Again, going public, so important, for future investors, to know what's ahead, what's coming up for the company, always forward looking. So my question for you is, what are you most excited for in terms of Planet's future growth?
Well, look, I'm excited by the general transition to democratize access to this data to more and more folks. I don't think we've even begun to see the best use cases for our satellite data. We're selling to the known knowns. It was obviously that Google would want our data for maps, and it's obvious that the US government would want it, and the big ag companies would want it, and so on. What is all the innovation that's going to come out when we let 1,000 flowers bloom on top of our data? What innovation will come out? We're obviously not a prerogative on the best ideas, and I can't wait to see what people come up with when they experiment on our platform. I would also just say that, a lot of that I'd expect will feed into two big trends. One is this sustainability trend and, greening of the economy. And there's a whole fleet of what Mark Benioff, our investor, calls ecopreneurs, like entrepreneurs that are focusing on ecology or environmental issues. That's a wave that they need our data to do their innovation. And then I also think there's a really understated thing that's happening right now. We're bringing and shedding light on the world events. I actually caught in your discussion with Nicolo, you brought up a few cases like that ship stuck in the Suez Canal and others, where we are shedding light on world events. We've had some really, obviously the recent floods in Germany, in the US, on the East Coast after the hurricane, the fires in California. We're shedding light on that. We showed recently we found over 100 new nuclear weapon silos in Western China that wasn't previously publicly known, and shedding light on things like that. That's hugely important. The Pulitzer Prize this year was won by journalists who used our data to uncover potential Uyghur detention camps. They found over 200 potential Uyghur detention camps in China by looking at our data. And I think that we're just at the beginning of shedding light on everything that's going on around the world and bringing about an era of a bit more transparency and truth-based era based on facts, not fiction. And I think that's super important, both economically and culturally.
I mean, we look at so many investor presentations, right, as part of this show, and we love these images at the end of this investor presentation, right, in the appendix. I mean, the Ever-Given.
That's our road and building detection that automatically picks up roads and buildings out of so you can just circle an area and say, tell us how many buildings there are, or tell us where the roads are, or if it's in a port, tell us where the ships are, and so on. And that's the kind of, just imagine where this is going. I mean, pulling out analytics of all the physical objects on the planet, the trains, the planes, the ships, the trees, everything, every day, to track where everything is going, then enables us to understand our changing planet and then take better care of it.
Yeah, honestly, I don't say this often, but it does look like the use cases are almost limitless, because there's just going to be more about who can come up with the ideas to use this data in a beneficial way. So it's definitely exciting to hear about. And I mean, I even saw that and you can tell me a little bit more about this, Will, but you can try it out, right? You can go to the website
Yep.
and try
You
out.
get a trial account. Yep. And you know, like it's more set up and geared towards the enterprise users, but I can't wait to unleash this on the developer communities, and they're going to have a whale of a time, right? But for now, it's primarily focused on those bigger companies, and there's plenty of growth opportunity there, and that's what I'm excited about digging in on here.
Awesome. Well, Will, before we let you go, one of the things we like to do on SPACs Attack here, you know, with our loyal viewers is we have some questions from the chat, you know, some questions for you. So if you don't mind, we're going to get into some chat questions here. So up first from Solar, we have, how is Planet Labs data actionable by its clientele other than Google Map updates? And is revenue at all dependent upon politics of the day, and saying state leaders, and also mentioning climate change? You know, we talked a lot about the data, but can you just talk a little bit about this question?
Yeah, I mean, I think that you're after how do customers really use it. I mean, let's take that farmer. They're trying to get better crop yields. What they're doing is they're looking at their fields and going, okay, where's their blight? Where's their need for more water, or so on? And they then use that to do what's called precision agriculture, which is doing different agricultural practices on different parts of the field to maximize yield and minimize fertilizer use. That's the kind of thing. So it's information that powers their decision. Literally, where do they put water or fertilizer? When do they harvest their crop? Civil governments. Let me give you an example. We work with Humboldt County, which monitors cannabis growing. Now, cannabis growing is legal in California, so it's legal, but it has to be permitted, and a bunch of people haven't been getting their permits. So they could send people out to all the thousands of farms, or they can look at our satellite image and figure out where people are doing it, overlap with their list of permitting, and then they just send a bill in the mail to the people that haven't got the permits. And so it's like let's say a speeding ticket for regulatory enforcement for civil government, and that's so that brings them revenue that helps them fund schools and hospitals or whatever in the local district. There's a couple more examples on that. I don't know if that answers the question, but hopefully.
I think that answers it. You know, great question there in the chat. You know, obviously hearing about the use cases, and as Mitch said, you know, the use cases here may be limitless, but obviously people want examples, right? And you were able to provide that. Mitch, what do we got up next for questions from the chat here?
All right, this one's a great one, and I think you like the name. Space Cowboy here talking here. So he's saying, how many satellites are required to be launched a year to sustain the constellations, and what are the average costs and lifetimes of each satellite? I know you have one, I think, right behind you, right?
Yeah, exactly. This guy here is one of our Dove satellites. So yeah, we had two fleets, as I mentioned, 180 of the scanning fleet. That looks like these. And then we've got 21 high resolution satellites. They're bigger telescope and camera system to enable us to get higher resolution. Well, those systems have to be replenished roughly on a 3 or 5 year timescale in the former case, or a 6 or 8 year timescale in the latter case. And we actually design the altitude so that they come down just as they get to the end of that lifetime. I think the important thing here is that we've designed that on purpose. We could put them up higher and get longer life, but we want them to re-enter on that sort of time frame, because just like you don't want a 3-year-old phone in your pocket, you do not want a 3-year-old satellite in space. We produce so much more data on every new iteration. So on a typical year, because of the replenishment cycle, we're maybe launching 50 satellites. Last year, we actually launched 89 satellites, so it was a slightly bigger launch. Three SpaceX rockets, an Electron rocket from Rocket Lab, and a European Vega rocket. And those rockets took off a bunch of new satellites. And at the end, we were able to collect 5 times more data per satellite from our Doves than the previous iteration. I mean, 5 times, because we put, instead of a 27 megapixel camera, we went to a 47 megapixel camera. Instead of a 300 megabits a second radio, we went to a 1.8 gigabits a second radio. So we are trying to improve the technology in space all the time. We call it strapping space to Moore's law. And so that we're leveraging the advantages of the reduced cost of chips, the increased processing power, the better sensors, the better CCDs, and so on, and stuffing them into our satellite, launching lots of them, and keeping them up to date. And so that's how we ensure that our satellites are the best, the best capability per dollar spent, and produce the best data.
All right, I got one last one. I think it's going to come from me here. And one thing that I'm just wondering, just because, Nicola Damasi does have, IonQ quantum computing, I would love to see how that data would do in a quantum computing environment. Is that something that you're thinking about, at least in the future, Will?
I think it's conceivable. Yeah, I mean, I haven't thought much about quantum computing applied to our data, but I actually did my PhD in quantum physics years and years ago. So I know some of that community. I think what they're doing is amazing, and some of these companies that are going to do quantum computers. And I certainly think for certain machine learning applications, quantum computing, can have an edge. We haven't obviously got to the stage where it's mainstream, and this is early days for quantum computing. It's been a while since I did my PhD, and it was nascent then. It's still nascent. Not quite as nascent. We've got real companies now being built, but nevertheless, it's still nascent. Look, I hope we can continue to leverage latest technology. I certainly think machine learning is helping our discipline no end, because computer vision, we have 3 million 47 megapixel images every day for people to analyze. And just like all the work that Google and Facebook have done on machine learning that enable you to recognize cats and dogs in pictures and videos, we can use that to recognize buildings and roads and ships and planes and things in our satellite imagery. And that enables a lot more applications. Look, I mean, it was great speaking with you guys. I mean, I really hope that it was fun. I hope because of this being a data business, the huge market and our market leadership position, it's going to be an exciting stock. It's DMYQ now, but cool thing is it will be PL on the New York Stock Exchange when we de-SPAC, and so that's going to be an exciting time. And I know people are interested in space, but they're also interested in sustainability. We've got both of those things, and I hope that's a fun thing for people to be involved. I'm excited to have shareholders, not just the big investors, but everyone else as well. And so I'm glad you do your work in helping everyone to hear and learn about companies like ourselves.
Well, Will, thank you for those kind words. Yeah, I mean, you guys heard it here. Another exclusive interview here on SPACs Attack. Not just space, not just satellite, not just ESG, not just data. This company has all those things, right? So the Planet CEO and co-founder Will Marshall, company going public via SPAC merger with DMY Technology Group 4. Right now, that ticker DMYQ. And as Will just said, the new ticker will be PL when the deal is completed. Will, thank you so much for taking time out of your busy schedule and joining us on the show today. We look forward to following the progress of your company going forward.
Thanks very much. Lovely to meet you both. And come by the lab in San Francisco.
Well, let's book it. We got to get out there. Nicola told us that too, so we'll have to try to plan this out. But we appreciate the invite.
Thank you, Will.
Okay.
Have a great one. There you guys have it. I mean, there's not many times where we go straight, literally to the bell with an interview. And
Yeah.
The reason why, I think, we were all learning, even Chris and I there. So we really appreciated Will taking the time to come on our show today. You guys do us a favor. Let us know in the comments. What did you guys learn from Planet today that you didn't know yesterday? Go ahead and hit it up in the comments. Now we're going to go ahead and transition you guys to the Power Hour. It's probably already starting, but man, that was such a great interview. I might have to rewind it myself. But you guys, like always, hit us up on the SPACs Attack. You guys can reach out to Chris Katje or me right here on Story Investors. If you guys got any SPAC that you guys want on this show, let us know. we'll definitely reach out and make it happen.
Yeah, I mean, you're spot on, Mitch. We usually don't go all the way till noon, but there was so much to talk about. I mean, great images in the presentation, great data, great questions from the chat. And Mitch, you know, before we go, I got to say this was great to do in person, right? Viewers got a treat. Thursday and Friday, I mean, right here, guys, this isn't an illusion. We're right here next to each other, broadcasting live. Before we go, Mitch, today's Friday. The markets are going to be closed, you know, later today. We're going into the weekend. But I heard that Benzinga has an event happening this weekend. You know, I know people have time on the weekend to do a little research, get a little education. So what does Benzinga have in store tomorrow?
Well, I'll let you guys know we got a full day of free FREE education. You can't get that anywhere right now. This is going to be from 9 a.m. all the way until 5 p.m. Eastern. So maybe you can catch an hour or two. Maybe you don't catch the whole thing, but definitely show on up, guys. If you want to improve your trading, a lot of that's going to be done on the weekend and studying. So if you want to learn from some experts, come on over to the boot camp and I'll play a little trailer and we'll see you guys on the Power Hour.
Thanks, everyone.
It was great. See you next time.